Would you ever go shopping without checking your bank account first? What if your card declined after spending hours in the store? Hours of wasted time that you could have been doing anything else. That's why step 2 of the buying process, getting pre-approved, is vital to buying a home. In this video, we're going to talk about 1, why you should get a pre-approval before seeing homes, 2, what banks you should choose from, and 3, what's the difference between getting pre-qualified, getting pre-approved, and being underwritten. So let's go ahead and get started. Number 1, why get pre-approved? Now, you wouldn't go to the mall without knowing how much you're able to spend, would you? Same idea. Getting pre-approved means you submitted your information like your credit, your pay stubs, bank statements, etc., all to a bank or a lender. They review them all and they officially stamped you approved and able to buy a home up to a certain price. But along with that, they would have had the most important conversation with you about what the payments are going to be and verified that you have enough funds for the down payment and the closing costs. Now, this is a must-have conversation. I find that just because you get pre-approved for a certain amount, the payments for that amount may be a little bit outside your comfort zone, and knowing what price equals what payments gives you an idea of your purchase power and allows us to shop with direction. Imagine not knowing what the payments are going to be until the day of closing and find out it's double than what you expected. Yikes! Now, getting pre-approved first eliminates all financial surprises. Also, depending on the market, you may not even be able to see a home without providing the sellers a pre-approval. They want to make sure that they qualify the buyers before they just let them inside their house to avoid anybody that's unqualified or any of the looky-loos who just want to stroll through the house with no intention of buying. Now, let's say you find the perfect home and you wanted to buy it. Well, without a pre-approval submitted with your offer, there's no way the seller's going to want to accept your offer or even take you serious. They don't even know if you qualify for the loan, and the risk for them is very high. They would probably rather take a lower offer, but a guarantee that the loan's going to go through. So going on to number 2, what banks should you choose and why? Yes, I know, banks are a dime a dozen. How does one go through all the different options and choose the best bank? Or do we use a mortgage broker? Or do we go with the credit union? Or do we go with the local bank? Let's talk about the pros and cons of each one. Let's start with the most known banks. I like to call them big banks. These are your Bank of America, Chase, Wells Fargo, Capital One, US Bank, big commercial banks. Now, these are great options for those who are looking to get the best rates. Hands down, smaller banks, well, they're going to kind of find it hard to compete because of the sheer amount of business they do, and that's why they can offer better rates. However, because they are so big, it's kind of difficult for them to take personalized care of their clients. Where the rates are better with them, speed and local personalization, that's where they fall a little bit short. Meaning that with these bigger banks, they typically take a little bit longer to get pre-approved and sometimes have higher qualification standards. And when it comes to finalizing the loan or closing escrow, once you get your offer accepted, well, they're typically a little bit slower. But what does this mean for you? If you're in a market like mine, it's incredibly competitive no matter what time of year it is. Time is of the essence. Waiting weeks for you to get pre-approved can cause you to lose out on so many good homes. Having tougher qualifications may require you to jump through a lot more hoops just to get approved. And if your credit's a little bit below top tier or you don't have enough funds, they may not approve you. Whereas smaller banks or mortgage brokers, they have programs they can qualify you for. Now, when it comes to closing escrow or finalizing the loan, well, these big banks, they can typically close in 30 days or more, which seems okay. But when you're in a market as competitive as mine and there's other banks that can do it in 14 days, the faster a bank can close, the more competitive your offer is going to look. Now, imagine 2 offers are submitted at the same price on the same home. A seller's going to have to decide which one to choose. The other offer, they said they can close and fund the money in 30 days. Your offer can close and fund the money in 14 days. That's 2 weeks quicker. Now, your offer got that much better without having to increase your purchase price. Having the edge on the competition on every angle, well, that's how you set yourself up for success. Now, local lenders and mortgage brokers, in my opinion, this is probably the route that you're going to want to explore. Now, unlike big banks, their rates may be a little bit higher. And when I mean a little bit, 0.1, 0.2%. Now, it's not overly excessive, but banks do have them beat there. But where these local banks or brokers shine is their ability to move quick and their familiarity with the local market. In my experience, I've introduced the client to a local bank at 11 a.m. By 5 p.m., she had her pre-approval and the conversation about payments already done. By 6 p.m., our offer on her dream home was submitted. 8 a.m. the following day, the offer was accepted, and in 14 days, I handed her keys. Wow! Now, I know it doesn't have to be that fast, but this is a real experience from the actual speed of a smaller bank. You never know if you're gonna need that bargaining chip in your back pocket, but I'd rather have it and not use it than need it and lose the home. Also, another reason that we're gonna talk to in a little bit more detail in the other videos is local market knowledge for their appraisers. Big banks, well, they're national banks and may not be able to understand individual markets. They hire appraisers from any area to find the value of the home. Now, this can be a little bit scary because your loan, that depends on the appraiser and the appraisal. An out-of-area appraiser cannot know the market if they're not from the area. A smaller bank only hires appraisers from the area. Having an appraisal who knows the area can make and break your loan if they believe the home is worth more or less than what you offered. So now jumping to number 3. What's the difference between a pre-qualification, a pre-approval, or being underwritten? Now, these are 3 levels of approvals. The first one is pre-qualification. Here's an example of being pre-qualified. Ring, ring, ring. Hi, this is Jaime from Bank 123. Yes, I'm interested in getting a loan to buy a home. Great, let me ask you a few questions. What's your credit score? How much money do you make? How much money do you have saved? What bills do you have and how much are they for? Great, thank you for answering these questions. Based on that, you're qualified for XX amount. Now, you can see how this isn't totally 100% official. The bank is only going off of what the buyer said, and at no point did they do anything to verify that this is true. Now, this is great if you want to get a general idea of what you could probably get approved for, or if you're too far away from qualifying without having to run your credit. But in no way can you submit offers with this kind of approval and have the seller take your offer serious. Now, next is the pre-approval. Here's what 90% of the people have. Getting pre-approved requires the lender to pull your credit, review your pay stubs, your savings account. They review all your credit and your financials and make a decision to approve you for a certain amount. At this point, it's pretty certain that you're going to be able to get the loan. They've also had that important conversation about what interest you're going to be getting and what the payments would be if you buy a home at a certain price. This is the approval that you want and need to start house hunting and submitting offers. Then the last level of approval is underwriting. Now, not all banks are going to want to do this before your offer is accepted because it requires other parties like the underwriter to review your file and do a little bit more due diligence, like calling your employer to verify employment. The underwriter is the person who's going to sign off your file before funding your loan. Since they are the last people to sign off on your loan before wiring the money to the seller, they got to make sure that every condition is met, every I is dotted and every T is crossed. Now, getting pre-approved lowers the chance of something happening during escrow, but being underwritten virtually eliminates that risk. This is beneficial for you, so you don't have to worry about your loan falling out, and also for the seller, they don't have to worry about you backing out of buying a home because you weren't able to secure your loan. So I hope this was helpful and easy to understand. I know I went through a lot of information and it can be very easy to feel overwhelmed. Hopefully, if you're at this step, you found yourself an amazing realtor who's holding your hand through this process. And if not, feel free to reach out to us here at Jaime Homes, as we would love to help you through your journey. I'm Jaime Gonzalez, and remember, everyone promises an extraordinary service, but only a few can deliver.